Hi, welcome to the market alert for Tuesday, the 27th of August 2019. So stocks jump on Trump pump, but yield curve inverts most in over 12 years. So let's have a look at the detail. We'll start off with the Dow for yesterday. We'll start with the daily chart, and we can see how the plunge protection team came in and they drove prices up some 700 points yesterday. But interestingly enough, as you can see here overnight, there's a bit of weakness around. The UK are back in business today, which certainly their absence yesterday helped to support this market and move it higher. You can see that those that are short were taking positions off the table yesterday, as this looks like a short covering bar and not new buying to me. But only time will tell today whether this will be the case or not. If it is, then let's just make a few adjustments here. We can get rid of this 76% retracement. We've already traded down to this one. We'll leave this one in. It's more on the upside is what I'm interested in. So if we go from here down to yesterday's low, watch this area here. We'll draw it in properly. Try again. There we go. 26,113. Could be a bit of resistance, which also coincides with the 200 bar moving average. We'll see what the market does in the pre-market session, but yesterday the market just moved higher in the pre-market session, which you'll see here. There was a bit of a pullback mid-morning, but the usual driving prices high. You can see it here again. I mean, this is a serious move in a pre-market session. Just to give you an idea, where normally you'd probably do 40 or 50 points, on a good day 100, but in the pre-market yesterday we had a total of 528 points to bring the market back. And as I keep saying, they want this market higher, they don't want it falling off the highs just yet, not until Trump has been re-elected. That's if they can hold it, of course. The algos might start selling before then, but we'll have to wait and see. So the market moving lower as we saw the session start at 2:30, and then we tried to bounce, but this failed, and the market then retested. The volume went down to nothing. There wasn't any selling around. We then had a potential buy signal, and the market was tested again. You can see this being done across here. You can see there the two lows. And then we start to make our way back to the upside. But the market only came back around 76% by the looks of things. So if we go from there down to there, bang on 76% there. So the market stopped at 76%. Then it, let me just take this one off. And let me add this one in from here to here, 76%. The market then moves higher through 76%, and what's fascinating here, as it makes this new high from here down to here and draw across 76%. And I mean, it's a fascinating the way the market actually does this. So combined with everything else, you can see how the market came back and then moved higher there. So had you have been short here on this one, stopping at 76%, you want to consider the market could bounce, and the same here when it came back to 76%. The opposite is true. You've got some comfort that the market could move lower. Even better if you get this happening at a 76% retracement at the 200 bar moving average as well, and also on the downside, which we don't see in this chart. For the main event, but they are there, trust me, they certainly are. I mean, here's one again, just you get so used to this, you can just eyeball it and you'll see there 76%. You've got the 200 bar moving average below it. So there we are. Let's just remove these. And so overnight the market started to move higher once more, which you can see, and has attempted to move a bit more of a range there. Like I said before, 50 points, 60 points, fine, but when 585 points in the overnight is quite something. It really is. So we've got a bit of buying coming into the market now, a bit of support. The Europe's just kicked off, so no surprise there. The market needs to get back above the 200 bar in the pre-market session if it's going to move back up and have a run at this level. Let's have a look at what news we've got today. There's nothing there to really talk about. There's a Bank of England member, Tenereo, I think is how you pronounce it. But it's a medium impact news item, so I wouldn't be too concerned about that at 1 p.m. It's not going to have any clout. Not since Carney came out and said that the dollar needs to go and we need a new global currency. That's a sign that you can always tell when a central bank is leaving office because he starts to tell the truth. Simple as that. Meanwhile, in the pound, we were down yesterday as the dollar moved higher on what happened in the stock market, and again we had the sell signals to confirm this. You can see there we have a short in the pound there. You see the selling coming in as it breaks both of the averages, but still finds support at the DP level. A bit of buying pressure, but then this doesn't hold until we get down to the 200 bar moving average, and you can see it's like a magnet. It closes above, closes below, closes above, closes below, and then the battle wins out to the downside. And the second signal here, you can see closing below the 20 bar moving average and then just moving lower before it bounces back and then hugs this line, which it has done overnight, and is just breaking above there with a bit of dollar weakness. You can see there a bit of buying coming in, supporting the market and trying to bring it back as the UK traders return to their desks. Meanwhile, in Bitcoin, holding above the 10,000 level at the moment, still looking a bit weak sideways, and it's become a bit spiky again. I think is probably the best word, or whipsaw, which we'll look at in more detail at the moment. You can't see it so much in the larger time frames, but as we go down to the 15-minute you will. So you can see sideways in the 4 hour there as well at the moment, and you can see how the spiky bits have returned where they just ramp the market down and then bring it back. Now you can still trade this, but what you want to do is to look for where this happens at the 200 bar moving average. That's the best thing. And then as the market moves higher, if we go from this high down to the low of here, you'll see 76% retracement. The market closes back below it. So you can pick your points. It's just that it can be a bit choppy, as we're seeing here at the moment. It tries to break out of the sideways move. So look for the extremes where you've got the volatility. Same here. You see how they shook it out, lots of volume, and then they bring the market back. They're the sort of things that we're looking for, and a bit of selling there. 76% retracement trade there. So that's Bitcoin. Let's have a look at some other news. Deutsche Bank managing to hold at the moment. Can't wait to see this go back down to this level and retest it. I need to just extend that across a bit at the 640 level, just down a bit. There we go. So we'll see. We're back below the 20 bar moving average, whether this will actually follow to the downside there. Again, it's just a matter of time really. And then let's have a look at the implied volatility. I've managed to get this into a new version of Excel here. It may work, it may not, may go back to just taking images. But yesterday we can see, this is fascinating as well, the market moved higher, and the implied volatility only dropped a few basis points. It didn't really certainly isn't convincing to say that this market is going to turn around. That's for sure. The traders aren't convinced. Had it have been the case, then you would have seen this sort of big drop, but we didn't get it. It just didn't turn up yesterday. So this is also interesting to see how this is playing out as well. It's another clue that it isn't all fixed as far as the stock market's concerned, even though they want this market a lot higher. And then in the with no annotations on the chart, you can see there we're still above the 20 bar moving average. We're still below it here as well. So again, at the moment we remain on the downside, as it were. And this is more of an intermediate one, and we're still red, and we're still below the 20 bar moving average. Actually, I have one with a 10 bar moving average on as well, just to see what's going on inside of the implied volatility as well, plus a myriad of other charts also. Right, 10-year 3-month yield. This is the main chart, which you've seen before. This is the blue there is highlighting the recessions. Obviously the inverted yield is in red, and you can see now we're building up this sort of same chunk that we've got in these areas prior to the economy going into recession. So, and also the data here, if I can just get this to move up a bit, there we go. So you can see there all of I want to pause it and have a look. This is analysis of all of the data. And then up to date, we've got the yield curve for yesterday down further at 0.47, if I recall. See if I can get that for you, but I'm sure it's 0.47. Yeah, it is. There you go. You can see that there. So yeah, it's interesting times, to say the least. So just to recap today, watch for the Dows. Looks a bit of weakness around at the moment. Get the right chart, there you go. But pulling back above that 200 bar moving average. We'll see, as I said earlier, whether we can start that assault to the upside prior to the main event. But the main event looks a bit sideways at the moment, but it's early. Europe's only just kicked off, and the UK in half an hour. Pound, well, it depends on the dollar. And Bitcoin, I say, choose the trades wisely because of these spikes at the moment, but that should improve going forward. We just get these odd days, especially bank holidays as well. A lot of traders missing yesterday. Okay, that will do for this one. If there's anything else to report, I will let you know, but otherwise, as ever, thanks for watching. See you in the next one.